Thanks everyone for coming to our LLM in trading webinar. So about a year ago, I embarked on a journey with Dr. Hamlet Medina, who is our main speaker here today, to find out whether all the hype about LLMs and more generally deep learning is justified. At the very least, I want to find out if we can use LLM to convert speeches or written text into sentiment scores, and in the process, saving us thousands of dollars a month from subscribing to sentiment data feeds. But ultimately, I want to see whether we can replicate discretionary trading using LLMs. In other words, whether we can create a George Soros or Warren Buffett chip to help us trade better. So I'm very excited today that Hamlet will be able to highlight some of our findings today. These findings have been included, as Mohit said, in our Contra course, as well as in our forthcoming book on generative AI for trading and asset management. Hamlet, for those who don't know him, is the chief data scientist of one of France's most successful publicly traded firms. And he's one of the true experts in the area of deep learning and LLMs. So without further ado, I will let him speak.
Hi, many thanks, Ernie, for such a nice introduction. Thank you, everyone, for having me today. And so, as you know, today is going to be about generative AI, and so I'm going to start by sharing my screen. Can you see it? Yes. Okay.
Yes, Dr. Medina, we can see your screen.
Okay. So today is about generative AI for trading and asset management. So generative AI is about all modeling high-dimensional data or signals, such as image data, audio, text, and time series. This term, generative AI, have been popularized by LLMs, basically by products like ChatGPT that have been developed by OpenAI and Gemini by Google, and many other competitors that are entering into the ecosystem. No? And so let's start by that. What is an LLM, and basically what is able to do? No? I asked ChatGPT, in this case, to make jokes about the question that I'm going to provide. No? And I started with this user prompt, and then I say, what does Mark Zuckerberg and Elon Musk have in common, in order to see what it's going to answer. And what this kind of LLM, like ChatGPT or the one by Google, what they are going to do is that they are going to build a probabilistic model of the next word in the sequence. So what they are going to do, they will start to answer one word at a time. And for every word, they are going to build a probabilistic model taking into consideration the previous values in the sequence. So they are going to input this sequence and I'm going to output something. So let me show you more with that animation what is going to happen. No? When we input that into the system, it's going to provide a probability distribution about the most probable words. Here, I am only considering the top 20 most probable words that is going to output. And as you can see here, basically the first word is going to be they, the second word is going to be they are, both, and well, no? And because this is the one that has the highest probability, this is the one that ChatGPT is going to choose as the first word in their answer, no? So he's saying, no, what does Mark Zuckerberg and Elon Musk have in common? The first word that is going to output is they, no? And this is what is called an autoregressive model. Basically, what is going to happen right now is that the new input to the model is going to be the prompt that we provide to the systems and the output that the LLM provided. So now we have an augmented output. And using this new input, what is going to happen is like she's going to provide another probability distribution for the next sequence in the word, no? In the sentence. And here we're going to have that basically the next probable word is both. And we're going to continue like that every time. Now the new input is going to be the prompt that we provided plus the two words that the LLM output in order to provide the third word in the sequence. So every time it's going to be a probabilistic model based on the input. And basing this probabilistic model, this probability distribution, is going to sample some of the words from the distribution. No? In this case, basically the third word was half. No? That is the one also with the highest probability. And sometimes can happen that it's going to pick the word with the highest probability or not necessarily. So we're going to sample from this distribution. And if we continue this process, that this is done automatically every time that we add something to ChatGPT. So we are going to arrive to probably this time, no? What do they have in common? Is like probably they have enough money to buy a small country. And if we continue that, doing that in a recursive manner, he's going to arrive to a final answer. No, they both have enough money to buy a small country, or at least they will buy a really nice pizza place. No, and this is a short example, but what I want you to transmit is this idea of probabilistic modeling. No, we are computing a probabilistic model of the next token in the sequence or the next word in the sequence, and based on this word, we're going to generate a new output. No? And this is what we call the main abilities of generative models. So generative models are designed with the three principles in mind. So the first principle is we want to generate new data, as we see with in the previous example with ChatGPT. We also want them to compute probability densities. And like in the previous case, we can use these probability densities to generate data, and some models can even don't compute probability density, but they are able to generate data. So there are a family of models that can attack the same problem. And the third principle that we want for this generative model is they can compute a new representation of data. So please try to keep this in mind, that these principles are very important at the moment of generating application based on LLMs. No? So generate new data, compute probability densities, and compute the representation of data. And these models are not only like we can tell toy models, no, that are used only to generate new data, generate new images, generate videos or fake news. No, they are used very heavily in many industrial applications, and they can improve many downstream tasks. So I'm going to explain what I mean by this downstream task. But for example, one of the most famous products used in the world, Google Search, basically using on the line a model that is called BERT, that is a kind of LLM, basically for providing recommenders, for providing answers to your queries, no? Every time you use it. So it was used in 2019 when it was released, the model BERT, until 2022. So right now, probably they are improving, but this was the main model that was in use. And companies like Amazon, so they are using a variant of BERT for building the recommender systems. Companies like eBay and companies like Criteo, that is in my workplace, we use like variants of BERT in order to build our huge, our recommender system that are serving billions and billions of requests per day. And also they can be, this kind of models or generative models, they can be combined in some interesting ways. And right now it seems like the sky is the limit, how you can combine these models in order to develop very robust applications. So let's start with, let's see another example, no? In order to illustrate how we can combine these models together. So in my original example, so we input text, the process was a typical question and answering task. So we input text and the output was text. Here I will ask, we're going to do something that is text to image, no? We're going to prompt ChatGPT to generate, let's say that I am writing a book and I say, generate a cover for a book on stochastic calculus for finance and include the Batch-Shor equation on the cover, no? What the output, as you see it in the screen, so it's a very, very beautiful cover, very well designed, and probably we should be interested in using it for the book, no? But what I want to highlight in this example are basically, first, the way how ChatGPT generate the output in this case. If you remember in our first case, in LLM is only able to predict tokens, no? Or ChatGPT, the base ChatGPT is going to produce words, it's going to generate words, it's not able to generate images, no? And so how it generated kind of image, no? And it was because in this case, we use ChatGPT not like a single entity, we're using like a task manager, what we call a agent system, no? What is going to happen, what happened under the hood is like, we're going to input this prompt to ChatGPT. ChatGPT is going to recognize that basically this is a task that he is not able or she is not able to solve, but he has a model that is called DOR-E that is able to solve this task. So I'm going to send a request to DOR-E that is going to generate the output, and after it's going to display the output to us. No? And basically this is a way how we can combine systems. It's called a multi-agent system, where we have a central unit, or a task manager that is going to receive all the incoming requests. And basically, this central entity has the ability to understand the text or the request very well. And after it can basically dispatch the specific task to specific models. And the second part that I want to highlight in this example is like, remember that I asked for the cover to have the Black-Scholes equation on it, no? And basically the Black-Scholes equation is not on the cover. So it is written Black-Scholes, but the equation is not there. So, and this is related to how we evaluate the quality of the answer provided by these models. And this is particularly important when we are developing applications where there is some interaction between the user and the machine, when we need to do some prompt engineering, some prompt iteration in order to have the same, to achieve the result that we want. So this is not a problem here. What we need to do now is go back to the prompt and after modify it until we see the Black-Scholes equation on the cover. But it means also that I know what I am looking for. Basically, I know the answer that is going to be provided by, I know the answer that I want the LLM to provide, no? So it means that we cannot use this kind of system blindly without accepting the response that they are going to provide, because sometimes they are going to be right and sometimes they are not going to be right. And in the case that we are talking today of financial application and asset management, so if we take a decision without basically verifying it very well, it can have like some financial issues. No? So verify the output is one critical aspect, and this is the industry and the research are developing solutions how we can trust these kind of systems. Two, I would say, straightforward ways how we can use these LLMs for finance. One can be like, it can help us to generate code for basic quantitative trading strategies, and also can help us to generate develop trading strategies. These are two main cases. Here we ask, this is non-code generative AI for basic quantitative finance. We know that basically in finance, quantitative finance, we always use data, and even no quantitative finance also. So we ask here ChatGPT as an assistant to please provide the code to retrieve the latest closing prices for the ETF FPY in the last 100 days. No? And what it's going to do, so it's going to provide the answer. This is a code that is in Python and is using a popular library that's called Y-Finance that is going to download the data from Yahoo Finance. And if you run this code, the code is going to work. But as in the last case, so the code is correct, no? But as in the last case, you need to know more or less when I see here pre-adjusted close prices, I need to have some idea of what is a typical tabular format that I expect to see. But at least when we are talking about code, for the verification of the output can be easier, can be automated, because we can write like a lot. It's not going to be easy, but at least you can write some unit testing in order to verify that the output that are going to be provided by these LLMs are complying with your expected output or not. So here you can do some unit testing, no? And another way we can use it is, as I mentioned, for strategy development. And this is a real example. This is an example that was generated by Ernie, and I really like it a lot because it goes in an alternative direction on how we can use these kinds of LLM. You know? Imagine that I'm going to develop a strategy. Probably the typical one way that I can use it is ask ChatGPT, please give me one strategy that is going to generate me some profit. No? But probably this is not going to provide, as mentioned in the example, so it's not going to provide a very good answer. No? But what we can do is to basically use it like an assistant and use the knowledge that we have about strategy development, and see, for example, the LLM can help us to see some part that we are not aware of. So for example, imagine that I want to develop a long-short strategy, and I have some model, I have some asset in my universe, and I have one model that's going to predict the expected return for every asset in the universe for the next 30 days. So for every asset in my universe, I have one score that is proportional to the expected return, or is equal to the expected return. And what I want to do in my strategy is I'm going to sort these stocks in my universe and put them like in a vector, something like that, no? And what I'm going to do is like I'm going to buy the top 50% basic, and they are sorted by score, and I'm going to sell the bottom 50% that I have in this vector. Basically, the highest, the top 50 highest score, I'm going to buy it, and I'm going to sell the bottom 50. No? And I have been developing this strategy using ChatGPT. But in one moment, I want to verify if ChatGPT is really understanding the stuff or is only completing the next word, as I show in the first example. No? And so the idea here is, as we ask when we are in school, imagine that you are a professor or a teacher, you ask your students to verify if they are understanding or not. Here, you can ask ChatGPT to verify if the machine is understanding the development until that moment. No? And here, what we ask ChatGPT, so we have this long-short equity strategy. Say, imagine that I have this strategy that buys the top 50 stocks with the highest predicted return and short the bottom 50 on a daily basis, and hold this position for the next 30 days. So it's exactly the same that I mentioned. So I don't see my mouse already. I don't see it. Okay, I see it. I'm going to take so the top 50 and the bottom 50. I'm going to sort that according to the expected return. And I ask ChatGPT, what is the maximum number of positions that we can hold for a particular stock at any one time? And here, basically, the answer is, I'll let you think for a few minutes, for a few seconds, but for question of time, I need to advance. And the answer is 30, because what is going to happen is like the time horizon is 30 days, no? And I'm going to trade basically this trading strategy every day. And what could happen is like one stock can be, according to the score, can be in the top 50 all the time until the end of the 30 days. In this case, I will have 30 overlapping positions of the same stock, or it could happen like the stock can be in the bottom 50, and it could happen the same, or probably it can be moving from the top to the bottom, and it will be like 30 days in my trading account, we can say. And basically, this is the answer that he provided at the end. So this scenario assumes that the stock consistently appear either in the top 50 or in the bottom 50 each day for the next 30 days. This is a way how, at least you are developing some strategies using this interaction with ChatGPT, you can verify if the machine is understanding what you are doing or what you want to do. Right now, I want to transition from the typical application that we see over the internet or over tutorial where we are interacting with ChatGPT until now, no? Either for developing the code, even for improving the strategy, and to develop more standalone applications. So the main idea here is that, as I mentioned at the beginning, this LLM, so it's an autoregressive model, and under the hood, there is a powerful model that is called the transformer models. And this transformer model has revolutionized many, I would say, many domains in the machine learning industry or in the artificial intelligence domain, not only starting with text, but also with image, with audio, so it's all over the place. And so the question is, can we take one of these systems in order to develop one standalone application that is more adapted to finance? So let me see here. And let's start basically with the core abilities of a generative model. So what we can do, let's start basically enumerating what are the abilities of these models and what are the type of application that we can solve with these models. Imagine that we can generate new data. So, and we are not using the interface with ChatGPT. We can generate time series, for example. So if we are generating new data, what are the kind of application that we can use in finance? So we can do what is called data augmentation or risk management. No? In data augmentation, so the problem is like I want to train a machine learning model, but probably I don't have enough data in order to train it. And what I'm going to do is like I'm going to use this one generative model in order to generate scientific data to increase the data set that I have in order to train this model. No? And hopefully the statistical properties of this new synthetic data set is going to be similar to the statistical properties of the real data, and I can develop a more powerful model using this methodology. No? I can use it also for risk management. No? Imagine that I have this, I have a trading strategy like the one that I mentioned in the example, where you're going to buy the top 50 and short the bottom 50. And also you have another layer that is called for the portfolio construction that is going to tell you how much money you need to allocate to every position in the universe. And so what you can do is like, so if you are developing a trading strategy, you are interested basically in how much money you're going to make or potentially how much money you're going to lose. What is the amount of money that you have at risk, no? With this time generation or series, what you can do is to simulate different scenarios and basically evaluate the performance of the whole strategy in every one of these scenarios, so that at the end you can compute like summary statistics about the performance that your complete strategy is going to have. So it's like every time series that you can generate, you are going to run it over your whole strategy and see the performance that it's going to have. And because you can generate multiple scenarios, you can see how you can evaluate how your strategy is going to perform over different situations. And this is something that is really important in finance. No? If we can compute probability density, so the applications are more obvious, I will say that. So we can do forecasting. In the first example, I was forecasting the next token in the sequence, and it was a sequence of text. If I have a sequence of prices or I have a sequence of return, I can try to forecast the next price or the next return in the sequence. And here I put like example, no, a very hot stock at the moment, Nvidia, and we could try to predict the forward daily return of Nvidia using one kind of model. So this is an autoregressive model that is called a recurrent neural network and LSTM. Basically, and the name is not important for the talk. What I want to basically communicate is like there are many solutions for solving the same problem. No? And it's up to you, basically, the model to pick the more appropriate model to solve the specific problem that you have at hand. And we can do anomaly detection. So it's like we can compute, once we have this probability distribution, we can compute what we consider an anomaly. If we are modeling prices, we can compute what we call a 3 sigma event or a 6 sigma event, or we can use it even for more traditional applications in banking, like how we can detect a financial fraud. Basically, we have like a transaction with a credit card. Basically, what is the probability that this transaction is a fraud or not? And with the latest, basically, application, with the latest principle is how we compute new representations. We can do what is called feature engineering or feature discovery, and we can use them in finance to use them as a risk factors or for computing market exposure. No? Basically here, and there are many applications that we can develop, but for today, I'm going to focus on only one. No? And this application is how we can use this generative model in order to do some alternative data processing, no? How we can process alternative data. And so the hypothesis that we have is like, is it possible to use sentiment analysis on the Federal Reserve speech conference computed using LLMs in order to generate predictive signals? So this is the demo that Ernest mentioned at the beginning. And here we were inspired also because by some work done at JP Morgan, and there was some press conference coverage about the model that they built, but you know, it's a secret model. They didn't provide almost any information, only it's an article. Even some people in YouTube, someone in YouTube started to play. It's called Larry Part-Time and started to play with this model, how he can build it. But we decided to go end to end in this case with some hypothesis that we took into consideration. So let's start with the demo, no? With the situation. So imagine that. So you are watching Jerome Powell, who is the chair of the Federal Reserve, as he communicates to the market the economic outlook. And you are wondering how this is going to impact the economy. Imagine that you are a trader, you have some money in your trading account. You are thinking how you can exploit the information that he's going to communicate to the market in order to make some profit. For some reason, you decided to trade the SPY, the ETF SPY in a 30-second interval. So this is the situation. You are watching him, you are watching Jerome, and he communicates the news to the market, and you want to see if you can exploit some anomaly, if there is some anomaly there that you can exploit. So here you are, you have your TV as you are watching Jerome, And in real time, you are also watching the trajectory of the SPY during the same time interval of the conference. No? And so let's think about how you can approach this problem. So how you can generate some trading signal, how you can invest in the SPY, considering the information that is providing to the market. So let's say that it's 15:01 p.m. here, no? And here I indicate that by the blue bar, the blue vertical bar. So what we can do, no? Imagine, so let's imagine for a moment that we are George Soros, no? And George Soros, as you probably know, he's basically the king, considered the king of macro trading, no? What probably he could do is like, he will listen to whatever he said, Jerome Powell has said until that moment. He will convert this information into an insight. And this insight, he can combine it probably with market data, and with the experience that he has, he's going to generate a buy or a sell signal, depending what he considers. No? So he's going to process the video until this specific time. He's going to generate an insight, combine it with another information that he considers relevant, like the price trajectory of the SPY or the forecast for the next interest rate, and generate an investment decision, going to buy or sell. And because he's George Soros, probably he's going to make some money. But probably you are someone like me that doesn't have the experience, don't have the experience of George Soros, and neither have the money that he has. Probably you want to do like a more quantitative approach that you can backtest and verify, or at least see if you have some hope of making some profit. Huh? But we're going to approach the problem, even if we're going to do something quantitative, we're going to try to solve it as George Soros would do it. No? So we're going to put ourselves in this instant of time, and we're going to process the video until that moment. But this means because we're doing something more quantitative, we need to convert this information to a single number. No? Or a single number, this is a mathematical representation that can be a number or can be like a vector or a matrix, whatever we consider appropriate. And we hope that this number has some predictive power about the next forward return, about the next return of the SPY. This is what we want, no? And the question that you can probably have until now is like, so I'm going to convert the video on one number, what this number is, no? And probably you can guess for the title of the talk. So we're going to use the sentiment. So we're going to convert video into sentiment and see if the sentiment has some predictive power of the return. That is the main question. So how we are going to do that? So we want to trade fast, no? At that 30-second interval, the SPY. And so we are in this moment. No? What we're going to do is like for every 30-second interval, we're going to extract the audio from the video until that moment, until 15:01. And now that we have the audio, so we can perform a speech-to-text conversion. Now we have text. And we know that the LLMs are very good at handling text. After that, we have the text, so we can perform sentiment analysis on this piece of text, and we have a number. And after, based in this number, or in the price trajectory, or also combined with other information, you can generate buy or sell signals. That is the main approach. So at the end, what we would like to have is something like this, no? We will have this tabular format where we have like the time, we have the typical price data, price bar data, when we have the open, high, low, and close of the SPY. But we also want to enrich this tabular format with the text, no? With information about the video he's communicating. So, and here we see that for when he started the conference, the first stuff that he said is, "Good afternoon, I will begin with." This is the first sentence that he said at the beginning of the conference. And using this text, we're going to compute, using another model, and the input text, we're going to compute the sentiment. And after, we want to verify if this sentiment score is related in some way, or it has some predictive power to predict the return here that is. Let me see that I lose the mouse. Okay. And here, this return is, we're going to see there is some statistical relation between the sentiment score and the forward return. So we did all of that. And here I can show you basically a scatter plot of what is happening under the scene. In the x-axis, we have the sentiment score. And in the y-axis, we have the forward return. Every point basically is a pair between the sentiment and the forward return. And the red line basically is a fit, a linear line fit between sentiment and forward return. And as you see here, hopefully at the end, we find like a linear positive relationship between the sentiment score and the forward return. And so it's basically, it says that the more positive the sentiment, basically, the more chance that you have to have a positive return, no? For the next bar. And the more negative, basically, you have the probability of having a negative return in the same size. So how do we, basically, for doing that, there is a lot of stuff to communicate, no? A lot of stuff to do. So we first start with, as in any data project, with the data collection and preprocessing. After we build what is called the transcription and the sentiment analysis model. And after there is the last part, that is the trading signal generation and execution. No? And for today, I want to focus only on the transcription and the sentiment analysis part. No? But are the ones that are more related to the generative AI component. So as you see, basically the input is video and price data. Video in finance is what is considered an alternative data source. Alternative data basically was noted by Lopez de Prado in his book in 2018. Basically offers an opportunity to work with truly unique, hard to process data sets. No? He said that remember that data that is hard to store, manipulate, and operate is always the most promising. He said that you recognize a data set that might be a data set that probably has some value if it annoys your infra team. He said that could happen is like perhaps your competitor didn't try it because it was too difficult to process, or basically gave up in the midway, or they didn't do the pre-processing or the computation correctly. So alternative data has most of the time has some value. And for that reason also we decided to do the demo using video. For the speech to text, remember that at the beginning I extract the audio, and after I'm going to go from audio to text. We use a model that is called Whisper that have been developed by OpenAI. And basically this model is almost achieve human level accuracy on English speech recognition. So it's a very good model, and it's also open source and free. So you can download it to your computer and start to play with it. So I'm going to be a little fast because the question of time. And how you can use it in Python, so it's easy to use once you have the library and the model. No? You import the library. Imagine that in this, I have in my disk, my local disk, a file that is called audio MP3. And this audio MP3 probably represents the first minute of the conference. And what I'm going to do is after I'm going to specify the specific version of the Whisper model that I'm going to use. And basically what this means is like the size of the model. And the size of the model in this case is a model that has 74 million parameters. No? After I specify the model name, I load the model in memory, and I only call the method transcribe, and it's going to produce the text. And here we see the text that is, good afternoon, are we being with overarching message. No? This is the model that we use for going from audio to speech, no? From speech to text. And in this way, was how we fill basically this text column in the data frame. We say for every bar, we're going to take probably the last minute of speech, and I'm going to convert it into text. Now the question is how we go from text to sentiment score. No? For going from text to sentiment score, we use a model that is called FinBERT. And it's a pre-trained NLP model specialized to compute the sentiment on financial text. And this is what we want, because this is very important. We don't want to compute the sentiment analysis in general, like for product recommendation, for example. We want to compute the sentiment analysis for a financial corpus. We know that the financial vocabulary, if there is a lot of jargon, so you know that EPS, EBITDA, CapEx, EBIT, earnings per shares. And so we want the model to understand all these keywords and probably interpret like phrases like bullish, bearish, long, and short. No? And all this data set, basically all these keywords are included in the data set that was used to train this FinBERT model. I put here that it's based on BERT because how the model was done, how it was built is like they took an initial model that is this model BERT that is the same that Google used at the beginning, is his search engine, no? And they took that as an initial model, and after they performed some adaptation of some fine-tuning that is called in the sentiment analysis dataset in order to make it better. And basically using this approach of pre-training plus fine-tuning tends to perform very well in many datasets and tends to be better than training a particular model directly in the dataset that you have. I wanted to basically talk more about that, but for time, I think that I'm going to skip that part. And the model that we use is a model that has 110 million parameters. You know? That for the model that we have now, we can see that probably is small, no? But it's a very good model. In fact, so the BERT, looking at some statistics, is probably the model that is more used in industry because of scalability reasons, because of performance, and many reasons for that. You know? If we compare with some of the most recent models here, we show Llama 2, but there is already Llama 3. We see that Llama 3, there is three models for Llama 3. One that has like 7 billion parameters, the second one, 13 billion parameters, and the last was 70 billion parameters. No? And for training this kind of model, you need like 1.7 million GPU hours using a GPU that, this is the model of the GPU, 100 with 80 gigabytes. No? And this is only to produce what we call the foundational model, the first model that after you can fine tune. And basically, if you made the calculation of taking this amount of hours for training it, probably you will figure out that will take like more than one lifetime to train this model. No? So what they do is like they put a lot of these GPUs in parallel, a few thousand of parallels, and the cost for training, for producing this model, it tends to be about $2.5 million in order to produce these kind of models. So BERT comes in two models, basically base and large, and the difference is basically the size of the model. The smaller one has 110 million parameters, and the second one has 340 million parameters. And we are using, in this case, the smallest one. And how we can use it in Python, you can call it using the library that they provide. It's very easy to use once you have the model and the library. So you can provide an input sentence for which you want to evaluate the sentiment, like, for example, Mark has less Facebook, and see what the model is going to output. No? And the model outputs a negative sentiment of minus 0.45. And the score is between -1 and 1. So it's going to provide -1 and 1. So this 1 is positive and -1 is negative. So let's go to the experimental results. No? In the experimental result, so we have these three systems, no? That we have a composition of systems in order to develop the whole application. And these systems are all standalone. We are not interacting with ChatGPT directly in order to develop this application. So we are using the same model that are behind this kind of very complex model, the same component, I would say, but in a smaller version in order to develop this application. No? We start with data collection and preprocessing, transcription and sentiment analysis, and training signal generation. No? For the data collection and preprocessing, what we did is like we collect 5 hours of video, basically of this event when there is a Fed speech conference. And we downloaded the video with the highest quality available. And in this case was audio bit rate was like 160 kilobits per second. And we segmented the audio using 60-second bars with a 30-second sampling interval. Basically, this was a trading frequency, 30 seconds interval, with a 50-second embargo. And this is in order to avoid, to reducing the probability of having some look-ahead bias. No? As I mentioned, from the transcription and sentiment analysis, we use Bayes, Whisper Bayes for the model transcription, and applying FinBERT in order to compute the sentiment. For the training signal generation, what we did is like we analyzed the distribution of the sentiment scores Based in this distribution, we compute some summary statistics, and we say, basically, we are using the standard deviation in order to decide some threshold. We say if the score is higher than the standard deviation, we're going to buy. If it's lower, we're going to sell the SPY. After all that, basically here we obtain the time series where we show the sentiment signal versus the forward and the forward return. Basically, the forward return is in blue, and here you can see basically the magnitude of the return in the y-axis, but in the left part of the axis. And in red, we see the sentiment score, and the levels of the sentiment score, we see it in the right part. No? Here we have a forward return that basically varies between -0% and 0.6%, and the score between -0.6 and 0.6. Here we have the scatter plot that I showed at the beginning. So hopefully we have a positive relationship. And now we see the performance table. No? Here, the first number that I want to highlight is accuracy. And with this system, we achieve an accuracy of 53.50% of determining the direction of the movement of the SPY. So this is only to say it's going to increase or going to decrease. We are right with this model 53.59% of the time. No? That in a typical application, a typical social application, this will be like very low, but in finance is considered a very good number. And it is the same for the Pearson correlation. So the Pearson correlation, basically, this is the relation between the sentiment and the forward return. We have 14.40%, and the p-value for this Pearson correlation is 0.2. So we say that this is statistically significant. So the conclusion, generative model, basically, of trying to communicate, there are very flexible building blocks for developing real life applications. So you can interact directly with the ChatGPT interface for helping you to develop code for quantitative finance, for helping you to develop strategies, or you can use it like a multi-agent system where ChatGPT is going to call a different model. It can be different models. They also offer what is called plugins that you can use for basically improving the accuracy, doing mathematics and all of that. And you can build this kind of multi-system, multi-agent system, not only using ChatGPT, you can use it also with open source models. And there is a very popular library that is called LangChain that help you to build this kind of system in a very simple way. In 2017, basically, the transformers revolutionized NLP, made popular LLMs, and now basically this model is not only in NLP, they are in vision application, time series application, financial, speed data, etc. So we have the quote that data that is hard to store and manipulate and operate normally is always the most promising. And LLMs are not perfect and may generate many potential false statements. So here we need to implement different systems in order to verify that everything is all right. If you want to know more, so we are writing a book with my esteemed colleague Ernie. It's called Generative AI for Trading and Asset Management. It's available for pre-order on Amazon at the moment. It will be released next year in May. What you will find there is we are going to go deeper into how you can use it for non-code generation of strategies. We're going to see the pros and cons of machine learning families in asset management, the pros and cons of the main families of explicit and implicit generative models for modeling high-dimensional data with applications in forecasting and risk management. And we also touched on another component that's called model compression method for deploying large models into production. And I didn't have the time to talk about that, is that the bigger the model, the more time it's going to take to make the computation. No? And if you want to deploy these systems in production, probably going to face a problem. So you are going to face a problem for latency. Imagine that you need to develop a strategy where you need to train like every 5 minutes, and you need to evaluate this model like 1,000 times in 5 minutes. Probably you are not going to have the time to do it. And model compression techniques are a way to reduce the model size in order to make this model faster without degrading the performance. And more. And so that's all on my side.
Thank you very much, Hamlet. So we have,
You're welcome.
I've been busy answering the 50 questions that have been pop up while we speak, but I do have a few of my own. So I want to be able to ask you as well. So
Okay.
one of the question that came up recently in a conference is that can we use deep learning, transformer-based deep learning, to pre-train a time series model instead of a text model like the LLM is? Would that, hopefully that would be useful for generating synthetic time series or making predictions. So is that something that people have done, or is it something even possible to build a pre-trained model with time series data?
Yes. In fact, there are people that are trying to do it, or they did that. Probably this question about pre-training and fine-tuning is remember that BERT, you can pre-training and fine-tuning, as I mentioned, like the way how they do it in NLP is like, so you want to solve some specific task, sentiment analysis, you want to compute the sentiment of a particular sentence, and you have some data set, and you're going to train the model to produce this specific model that's going to solve the task of sentiment analysis. But what people do now is like they are going to first pre-train the model in text, normally for this kind of application in text. But the task, the objective is not to solve sentiment analysis. Here, what they are going to solve is like the next sequence prediction, like I showed you in the first example. So there is a pre-training phase where I train the model with a lot of data only to predict the next sequence. And I'm going to use basically this model as an initialization for doing the second training step for solving the sentiment analysis task. And this tends to work very, very well, extremely well. Almost all people are doing that at the moment in the streaming academy. Something that happened in time series is like, remember that here I have two different tasks, Sentiment analysis, I have input and labels, and here I have a primary task, predict the next sequence. Like in time series, the first task and the second task are the same. Because, you want to predict the next sequence. You want to know what is going to happen tomorrow. The next token. So, and here the separation between what is the pre-training phase and what is the adaptation or fine-tuning phase in terms of the objective of the machine learning model is not so clear. Basically the same problem. And what you're going to change is the data set. What you're going to do is to input more data. And what you hope is like probably using a lot of time series that are probably not related to your problem, they can learn some kind of ability in order to predict some patterns that can help you to detect, to predict well the specific time series that you have. So there is one version that's called Time GPT, and Time GPT is GPT, they put the time. And they are going to create like this foundational model. And Time GPT was trained in a lot of, I would say, more climate data. This is one kind of data set that we have a lot. And I see some people that are after, so you train Time GPT and after you evaluated the different data set. This is something I try to do. For example, there is another version that is called Llama Lag. Lag, like you lag the time series, and Llama is the model based in this meta model, that is open source. And what they did is like they combine climate data with internet service provider data. And there you have a lot of data also because you have all these people calling, and this can increase the amount of data set. But when I see the result, basically comparing this model with standard baseline models that like ARIMA models, time series models, very simple, the performance. So they are better, but you don't see like the kind of gain that we see like when these kind of NLP models. And there, for example, probably in the result they improve, but at the moment of doing the deployment and the cost that it's going to take and the difference time that it's going to take for doing this kind of model probably is not going to be worthy to do it. This is in normal time series. When you go to finance, it's even worse because normally, these statistical properties of the finance data are very different for the kind of seasonality that you can have in consumer behavior, in weather, And so you train a model that is going to be see very clearly what is the seasonality, but normally in finance data, looking at seasonality, if there is some seasonality, it's very difficult to capture because of the amount of noise or that you're going to see. And so when they evaluate in financial data, they did the test, no? I use TimeGPT and test in financial data, and I train a base model using financial data without fine-tuning. The performance was sometimes better with a simple model.
Mm-hmm. Great, thank you. So another question is, how are the labels for the FinBERT model produced when you were training that, fine-tuning that model? Are they based on human annotations, or are they based on real market movements, or what?
Okay, that's a very good question, because it's like a little of both. Like I will say that. So it's based on human, no? It's based on human annotators, but they put the sentence and they ask, so that the annotators were students of economics and finance, so they have some background in finance. So they ask, do you think this sentence is going to impact positively the stock price of the company in the sentiment in the sentence or not? But they didn't look at the real price movement. No? Like the question are directly to the movement of the price, but they didn't verify what I think is going to happen. I like this data set because so it has some specific information about the movement of the price, what we believe is going to happen. No, they didn't see the actual movement of the price, so there is not some look ahead bias there as you are going to train. Also, there were many annotators, and after they compared the answers, there was some kind of majority vote between the annotators in order to verify the final answer. So it's a little mix of both. No? They were human, and they asked specifically about the movement of the stock price, but without verifying what the actual movement of the stock.
Great. So one last question for me. So we heard all these billions and billions of documents that are used to pre-train LLMs. But going beyond LLM, let's say we more generally, transformer models can be useful in many contexts, not just in language modeling. You can use transformer models for time series prediction, for example. But transformer models themselves are had a lot of parameters. How many samples have you seen that are the sort of the minimum number of samples needed to train a successful transformer-based deep learning model? Do you feel?
Do you think in NLP application or in another kind of data set?
In financial, let's say in financial.
In financial and finance. Yeah. So in financial, that is a very good question, I would say. What we know at the moment is that the more data we put into the model and the bigger the size is this model, the higher is going to be the performance. In fact, we are surprised that there are some equation or some plot that is called the scaling law. No? And this scaling law, what it said is like you can predict the performance of the LLM as a function of the data that you put, the size of the model, and the computing time that you use for training this model. And this is something amazing. So this is you want to improve the model sometimes, as you know, so it's very difficult to know the direction that you're going to take. But if you have money, so you know that you put more data, you increase the size, and you put more time to do it, and you're going to have a good performance. No. In finance, so the answer is not so clear, no? One of the reasons are because it's like the signal to noise ratio in finance is very, very low, as you know. Also, apart from the signal to noise ratio, you have the notion of non-stochasticity, no? It's like the time series, no, it's not stationary, it's varying all the time, and probably the true distribution that you want to model today is not going to be the same that you want to model basically in the next week or next day. So all these hypotheses made that you will need like probably more than the quantity of data that we use for training one NLP model. And so to give you an idea of what is the magnitude, the order of the data that we use right now for training these models, Llama 3 they use like 15 trillion tokens in order for training these models. And I believe that if you want to find like 15 trillion observation in the financial market, you need to go high frequency. So you need to go high frequency in order to have some hope, no, in order to train. But also this model have like 70 billion parameters, so it's huge, no, 70 billions. In finance, well, you would like, if you want to train some transformer-based model, basically you could start by reducing the size. So because you are using 70 billion, the higher the model, the bigger the model, the more data you're going to use. For example, there is one paper by a Professor Soro from Cornell that he successfully applied transformers model with transformers that have, I believe, that 10 million parameters. So he reduced the standard to 10 million parameters using I believe that he used monthly data for 20 years of data using the higher model, so he have reasonable well performance.
So 20 years of daily data or intraday data?
Sorry?
20 years of daily data or intraday data?
Daily data, I would say.
Daily, okay.
So you have if you have intraday, even better.
So basically, the number of data is actually smaller than the number of parameters in the model.
Yes, this is a characteristic that this model are what we call over-parameterized. No, in I would say like in traditional machine learning, people used to have like a rule of thumb. No, you say, okay, for every parameter you need like 20 points, no?
Right,
something like that. And you say, okay, if I have 10 parameters, so I multiply and I have the number of points. Here is not the same. So here you have the right to have more parameters than the data points.
That's right. That's right. And it's also interesting point. I mean, we can go on about all the nuances of deep learning and how different it is from, non-deep learning based system all day. I don't think we have all day, but I just want to close by saying that, it's very interesting that in deep learning, oftentimes you don't even need convergence to a minimum. Not normally we want to have training converge or something before it works, but in deep learning, typically you don't need to. You can have an over-specified model, and it's a non-convergent model and non-converging training, and everything still works. It's just magic. So let's conclude by saying that deep learning and LLM are magic, and just it's the greatest thing on earth. So with that, I'll take it back to Mohit.